Hey, John Napolitano here with you at Top Trading Pros. How's everybody doing? A lot of people were asking me yesterday about GE. It had a tremendous day, and people asked me, well, how do you trade something like this, John, when there's a big move and there's kind of unexpected news and everything like that? What exactly happens? Well, just a little bit of a background. GE came out with guidance on their aerospace industry and everything else. It's past earnings season, so their guidance was unexpected. And it caused the stock to rally significantly. It was up about, I believe, 9% in the pre-market yesterday. It ended up closing up on the day 5.27%. So that's an interesting thing just in itself. When something rises so much like that, is it going to continue to rise and close at its highs, or does it tend to fade? In the case of GE, it faded from basically 9% down to 5%. So the question is, how do you trade something like that? My answer is this. You trade what's in front of you, and you could actually trade it and fade it at the same time. In other words, you could go long in the morning and short in the afternoon. As the market melted down, you had an opportunity actually to go long and short in the same day with the same stock. Especially in the options market, it's very easy to do. So I'm sitting here on a Friday morning. There's actually a downtick today. I'm looking at it right now, but I'm going to show you what yesterday's candle looked like. I'm going to share my screen with you here, and you'll see. Ignore this red candle. That's today's candle, actually. But if you'll look, it gapped up. It was all the way up here, and then it kind of faded all day long, even though it ended up obviously closing high on the day. So the question is, how do you predict something like that? Well, you have to ask yourself the question, first of all, who pushes a stock this high on such heavy volume? Well, it's a very easy answer. It's the institutions. Institutions control 80 to 90% of the order flow on the New York Stock Exchange at any given time. And when I mean institutions, I'm talking about big banks, mutual funds, hedge funds, and insurance companies, not my 100 shares that I'm going to be trading or your 100 shares that you're going to be trading. So it's about institutions and what they're going to do. Now, GE is a very widely held security. So that always makes you wonder, what are the institutions going to do when it's up so significantly? So people started buying it. It's been obviously down for a while. It definitely is showing signs of resilience and everything like that. So the first thing I do is I would look at a weekly chart to see if there's any overhead resistance. In the case of GE, there isn't. It's actually, here's the weekly chart. So this thing could run all the way up to a psychological number of, let's say, 100. I mean, that's kind of where it was heading towards. So it's not out of the realm of possibility. But one of the things I'll do in the options market is I'll pull up immediately an option chain on something like this. And we teach this all in our classes, by the way, how to handle short-term moves as well as long-term moves. But basically, when I'm looking at something like this, my biggest concern when I'm buying a call or a put, if I'm going to do something speculative like this, I am going to look at volatility. I'm going to look and see, okay, well, what's the implied volatility? Am I overpaying for this option? Because even in a fast-moving stock, you don't want necessarily overpay for something because you might not get the return that you deserve for the risk that you're taking. So what I'll generally do is I'll take a gander over at the different implied volatilities. And as you can see here and here, the implied volatility is fairly subdued at around 29 to 30%. Now, GE tends to be a fairly sleepy stock, so it doesn't surprise me that the implied volatility didn't move all that much. So that gives me the green light, in my opinion, to go ahead and buy straight calls and straight puts in a situation like this. So this is all stuff we teach in classes, like what is the implied volatility situation? How do you analyze volatility? Should I take this trade? Is this something that's really, really important? So these are all things that, I teach in my classes at toptradingpros.com, and this is what, you'll learn from me. But basically, when you're going down to a day trade, I work on the 5-minute chart, and I have a magical line on my chart. And people get blown away by this because I use basically as few lines as possible when I'm making trading decisions. What I'll do is I will look at something called VWAP. VWAP is basically the volume weighted average price for the day. And here's yesterday's price action. Here's that 9% move that we were talking about in the pre-market from here all the way up to here. This grayed out area is the pre-market. So on the opening drive, it closed above VWAP on the first candle. That's the first indication that institutions are stepping in, even though the stock is up significantly. Institutions are stepping in and buying this. Volume weighted average price, or VWAP, is a very important benchmark that institutions use. I talk about it all the time in classes, and we talk about how to analyze it cautiously and carefully in our sessions. Now, when you go ahead and buy it above VWAP, you're basically going ahead and going long a call option all the way up to here until basically it breaks. Now, you could have sold out here on this red candle, or you could have waited for it to kind of tap VWAP right here, or you could have been super greedy and waited until it actually broke VWAP here. So your entry would have basically been pretty simple. You would have bought it on the opening drive when it broke VWAP. Your stop would have been if it broke VWAP by one closing candle, and your exit would have been somewhere here. After it broke VWAP, and that would have been your long for the day. So you would have been long from basically 9:30 in the morning until sometime around noon. But what was interesting about this is that it stayed below VWAP and it continued to deteriorate. Now, at that point, guess what was happening with the markets? The market has 60% to do with the movement of a stock at any given time, no matter what the stock is doing. So the market started to break down. So you actually had another opportunity. And this is why going long and being short and being agnostic about direction is so important when it comes to options trading. At this point, you could have actually taken a short position, and you would not have gotten stopped out. You would have, this was one candle that kind of poked its head, and then it continued to go lower. So either you got in here or you got in here, and you would have waited this out because you didn't have a closing candle above VWAP. What I want to see is a full closing candle above, and that never really happened. So I would have stayed in this trade from here to here, or I would have gotten in maybe later in the day here, and I would have gotten out at the close. So you have a short opportunity here, whether you entered here or here really didn't matter. And then you had a long opportunity from here to here. And either way, you could have traded it and faded it all in the options market. When you want to learn what strike selection to use and what expiration date to use for these short-term options, spend some time with us in our classes. We go over them all the time. We talk about strategy. We talk about how to play stuff like this. As you can see, I didn't play the news. No one knew this news was going to happen. Okay. So basically you have to play the reaction, not the news. And the reaction actually would have been more profitable in some ways than the actual news itself. So that's an important factor to consider as well. Trading what's happening in front of you versus wondering or worrying about what's going to happen. Okay. So that was a live example of what I kind of wanted to show you, and what is some of the stuff we do here at Top Trading Pros on a daily basis. So I hope you enjoyed this video. Please sign up to our YouTube channel, Top Trading Pros. Also our Facebook group, you could sign on for free and get some valuable insight, as well as our website, toptradingpros.com. Sign up for my upcoming boot camp, and you will be satisfied. You will see and learn everything about the options market. So I hope you enjoyed this quick video. I hope everybody has a great weekend. Enjoy and happy trading, everybody. Take care.